This is Daniela Camboni for Kitco News, and we are at the Mine Latin America Conference here in Toronto. Joining me now is one of the keynote speakers, Patricia Moore. She's the Vice President of Economics and Commodity Market Specialist for Scotiabank. She's also the creator behind the Scotiabank Commodity Price Index. What a coup, Patricia. Thank you for being with me.
Thank you very much.
So, Patricia, you started off today by speaking about the hot topic, the U.S. election. It's finally concluded. Obama's in power. What does this mean for commodities?
Well, I think the gold traders and gold speculators like it because they think the Obama administration will continue with quantitative easing and very loose monetary policy, and that can only be good for gold.
Right. I think you were saying how maybe Romney would have been better for the economic side, but Obama, the gold traders, are happy.
Yes, I do feel personally that Mitt Romney might have been a better bet to get the U.S. economy really rolling again. His emphasis on improving competitiveness for the United States really rang true to me as being a key priority. But of course, we'll see how things go with the new presidency, and gold will benefit.
So, Patricia, you said you have a conservative outlook for gold, though. You're looking at $1,700 gold for 2013.
Yes, we think the U.S. dollar may be a little stronger as we move through 2013, mainly because of a slightly stronger pace of growth in the U.S., particularly in the second half of the year. So it may just edge up a little vis-a-vis the euro. It's really weakness in the euro that we're looking at. But I wouldn't expect a great market for gold, but certainly we are constructive and do expect it to move higher.
Do you think that the QE3 would have or should have propelled gold higher?
Well, it did propel gold, of course, and the traders have were waiting for QE3 through much of this year, and then we're finally happy to see it come in September, and of course immediately bid up gold, but it only really moved up to about the $1,791 an ounce mark, and that's still below the all-time peak back in September 2011 when it was over 1,900.
Right. So you mentioned QE3, you mentioned the issues in the Eurozone, but you also mentioned that the liquidity that's being pumped by the Bank of Japan. That's a topic we don't speak about much when we look at gold, how that might affect prices as well.
Well, that was quite interesting to see. The Bank of Japan actually has their own quantitative easing, and we feel that is that they have come out with that because they want to get the yen a little bit lower against the U.S. dollar. They're really worried about hot money moving into the Japanese yen, and they'd like to see easier interest rates, easier monetary policy to keep the yen from appreciating. Of course, Japan is a major exporter of many manufactured goods, including cars, and they don't like to see an overly strong yen. So there's a bit of a competitive easing of monetary policy around the world as well to keep currencies from appreciating against the U.S. dollar, which is quite interesting to see.
Patricia, you also mentioned that you saw something extraordinary from the Fed that you've never seen in your career.
Yes. Well, of course, in the last FOMC minutes, the Fed mentioned that it probably would keep monetary policy and the Fed funds rate unchanged through the middle of 2015, even if the U.S. economy revs up. And of course, I don't think we've ever quite seen interest rates this low, this long, certainly in my career. And to see the Fed actually say it probably wasn't going to jack up rates for that long a period is really quite extraordinary.
Something else you mentioned we should be paying attention to is the Basel III regulations kicking in January.
Yes.
How might that impact the yellow metal?
Well, of course, that's quite interesting because gold is going to regain its full status as a financial asset. Banks will be able to hold gold as Tier 1 capital, and a very interesting development for gold. Remains to be seen how many banks are going to hold gold for that purpose, but nevertheless a positive for gold.
Patricia, you're heavily focused on China as well. What are some developments you're seeing here? I think you're quite bullish on China, and you think their GDP will pick up again.
Yes, I think China's GDP is going to rev up again in the fourth quarter, probably only modestly, but we're beginning to see a bit of a rebound in industrial production beginning in October. Right. Of course, over the summer, there was a lot of inventory reduction for both manufactured goods and also steel and ferrous minerals over the summer, but that seems to be coming to an end now. There's a big infrastructure spending program in China again. Not as big as the one in late 2008, but nevertheless significant. And so we see investment spending picking up, and that usually is quite metal intensive, so it should be positive.
I think you mentioned a statistic that I found astonishing, that China uses 47% of base metals in terms of consumption.
China accounts for almost 44%. Of the four key base metals, copper, zinc, aluminum, and nickel, in terms of world consumption. So they are terribly dominant now in the global metal space.
Right, 44%, and the U.S. is less than 10%?
The U.S. is about 9.9% this year.
Wow. Finally, I don't want to talk about the fiscal cliff because it's the most overused term in the media right now, but do you think the U.S. will overcome it, Patricia?
Yes, so we think that some kind of a plan will be put together in a hurry, but they only have about a month and a half to do so there's going to have to be some quick work on that.
So you're looking at $1,700 gold about for 2013.
Perhaps a little higher.
Perhaps a little higher, but what about silver?
Silver, yes, I'd be fairly optimistic about that, perhaps $34 in the coming year. It's, of course, partly a precious metal, but also an industrial metal, though there are very good new applications for silver in things like medical use, photovoltaics, in solar panels, so a lot of very interesting new uses for silver.
Finally, Patricia, something interesting I learned. Scotia Macata, the largest physical trader of gold in the world.
Yes, and of course, Scotiabank and Scotia Macata is a member of the London Gold Fix, also the permanent chair of the London Silver Fix, and one of the first foreign members of the Shanghai Gold Exchange. So we're very major players in the gold market.
Patricia, thank you so much for your thoughts today.
Thank you.
And thanks for watching our coverage from Toronto. You can email me any comments or questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.